The current assets of a firm are rupees 8 lakh and current liabilities are rupees 3 lakh. The firm is interested in maintaining a current ratio of 2:1. Right now, if you will see, it is more than 2, 3, 3 to 9. Yes, obviously it is more than 2:1, but firm wants to maintain it at 2:1. If last year you remember, I told you that we can manipulate the data also. So if I want to show it in a better position, I can do that also. So now how the accountant is planning for that I should acquire some current assets on credit and I should make my ratio 2:1. State the amount of current assets that should be acquired. Now we have to decide how much current asset he should acquire so that the ratio should become 2:1 now. So for that purpose, we will write the first we will calculate the current assets. So now let's suppose firm should acquire X amount of current assets. X current assets. Now when firm will acquire X amount of current assets, your current assets will increase. So current assets will be now previous current assets were 8 lakh and it will increase by amount X. Same way your current liability are right now 3 lakh and because you are acquiring current assets on credit basis, so your current liability will also increase. So it will also increase by amount X. Now if I calculate the current ratio, then the formula will be current assets upon current liabilities and then it will be here 8 lakh plus X divided by 3 lakh plus X and it should come 2:1. It should come 2:1 as the question is saying. So now if I will be solving it, it will become, and you can write it 2:1 instead, you can write it 2/1. 2/1. So now cross multiplication will be there and it will be 6 lakh plus 2X is equal to 8 lakh plus X. This type of equation will be there. And now if we will solve it, it will be 2X minus X is equal to 8 lakh minus 6 lakh. And it will become 2 lakh. X equal to 2 lakh. So X amount means the amount of current assets. So the answer is that rupees 2 lakh current assets current assets should be acquired. Should be acquired. This is the answer. Now coming to the next part of the ratio. Next part of the ratio is liquid ratio. First one you have learned current ratio. Now the next ratio is liquid ratio. It is also a part of liquidity ratio, and it will help to assess the short-term financial position of the business in a better way. If somehow the firm is desiring to pay the current liabilities immediately, then what is the position of the firm? Now, first concept which you should be knowing is what is the meaning of liquid assets. So last year also you have studied the meaning of liquid assets. It is the assets which can be converted into cash fast, very fast. That can be termed as liquid assets. Like cash is also a liquid asset. It is in the form of cash only. Then bank account, then your debtors. So such current assets are termed as liquid assets because you can convert them into cash fast. And in denominator, current liabilities will only be there as it was in current ratio. So here we will be comparing liquid assets with current liabilities, because if we want to pay current liabilities immediately, obviously that will be possible only through liquid assets. So here we are observing what is the status of liquid assets of the firm. Now how we will calculate the liquid assets? The formula will be liquid assets is equal to current assets minus inventory minus advance tax minus prepaid expenses. You have to exclude these three accounts from current assets, and then you will be getting liquid assets. Now remember that when you were calculating current ratio, at that time inventory was included in current assets, but loose tools and stores and spares were excluded. Now the remaining part of the inventory which was included in current assets, that will also be excluded from the current assets for the purpose of calculating liquid assets. Why we are excluding? Because inventory conversion of inventory into cash depend upon the situation in the market, demand in the market. If demand is there, you can convert it into cash, but if demand is not there, you will not be able to sell your inventory. Advance tax is already paid to the government of India. It will not be converted into cash anyway. Then prepaid expenses is also an payment of expense in advance. So you cannot convert it into cash. So that's why these are current assets, but these are not liquid assets. You cannot get the advantage of getting them into converted into cash. That's why we will calculate liquid assets in this manner after excluding these three accounts. Then inventory, advance tax, prepaid expenses, these all you will find in note number. If you are calculating ratios of your company which I have provided to you, then where you will find these three information, if you will see the note number of other current assets in the PDF, there you will find these three informations. And please try to calculate the ratios of your balance sheet on daily basis. Only then your project will be completed. I will not be able to guide later on. Now, what is the ideal of liquid ratio? The ideal of liquid ratio is 1:1. However, 2:1 is considered safe for current ratio, but 1:1 will be considered as ideal for liquid ratio. Okay. Now the next part is, it aims to assess the liability to pay current liabilities immediately. So if we desire to pay the current liabilities immediately, what is the status of the firm in that manner that we are assessing? Liquid assets are also called quick assets. Liquid assets is having another name which is known as quick assets. And that's why this ratio, liquid ratio, is also having two other names. One is quick ratio, or sometimes it is also called acid test ratio. So you should be knowing all the names of the ratios also. You can get any name in the exams. So now you can see the formula will be liquid ratio is equal to liquid assets upon current liabilities. This will be the formula. Now we have to calculate the liquid assets. So total asset have been given, non-current liabilities are given, non-current assets are given, shareholder fund is given, prepaid expenses, inventories are given. So first I will like to calculate the liquid assets. For that purpose, I have to take help of this balance sheet also, which I have told you yesterday. That will help you to remember the formula also. See, total assets are given. So total assets will come here. Total assets are 15 lakh. Then non-current liabilities are given 5 lakh. So non-current liabilities I will mention here 5 lakh. Non-current assets are given 7 lakh. This will make the picture clear. Then shareholder fund is given 6 lakh. Prepaid expenses are given 30,000. That will be included in the value of current assets, and inventories is 1,70,000. That we don't need to write here. Now, with the help of this balance sheet, I will calculate it as balancing figure. This is only for my personal purposes. I have to mention it in formula form. Like how I can mention it in the formula form? I will write the formula: current assets is equal to total assets minus non-current assets. Then I should write it. Current assets is equal to total assets minus non-current assets. So it will be is equal to total assets are 15 lakh minus non-current assets is 7 lakh. So my current assets will be 8 lakh. Now I can calculate liquid assets. Assets is equal to current assets minus inventories minus prepaid expenses. So is equal to 8 lakh minus inventories are given 1,70,000 minus prepaid expenses are given 30,000. So 2 lakh I will subtract and I will get liquid assets as 6 lakh. Now I can calculate current liabilities. Current liabilities is equal to, see, total liabilities will also be 15 lakh. As per the rule of the balance sheet, total of liabilities will always be equal to total of assets. So from this total, so I will mention it here according to the question. Total assets minus shareholder fund. So you will not surprise how these formulas are coming, because you will be logically clear about these formulas. Minus shareholder fund minus non-current liabilities. This needs a regular practice. Is equal to total assets is again 15 lakh minus shareholder fund is 6 lakh. Write in the same sequence. Non-current liabilities are 5 lakh. Sequence should be kept same. So now 15 lakh minus 11 lakh, it will be 4 lakh. So now you can say Your liquid assets are 6 lakh. And your liquid liabilities are, current liabilities are 4 lakh. So it will come 1.5:1, and that will be considered as good because the standard is saying that it should be 1:1, but it is slightly more than 1:1, it will also be considered as good. But if it is also coming too high, like 2.5 or 3:1, that it means that you are keeping your funds idle. You are keeping them, you are not using them properly. So this way, we have completed 2 ratios. Try to practice these 2, and please calculate your ratios for your company and send me on WhatsApp also.